So another interesting thing to look at, and it's a little bit of maybe a knee-jerk reaction to last year, where despite all the headlines that were going on in Europe and all the negative news with Ukraine and what appeared to be an imminent energy crisis and a recession, international stocks outperformed. And I think that's very interesting to note. Something that we've been following for some time is just the outperformance of U.S. versus international. It's the longest period that we've seen by a multiple. 14.2 years the U.S. outperformed the international market. And it did so by an astounding rate, 277%. So again, nothing even gets close in duration. And the only thing in magnitude that's comparable is when Japan, everybody thought would take over the world in the late 80s. International outperformed 299% versus the U.S. So I think it's interesting to say, where am I going to invest today? Why did international hold up so well? And a good way to back into that is, why has U.S. done so well for the past 14 years leading up to last year? Some people would say, gosh, well, earnings have been much better in the U.S. And that's true, but it's not by much. Really, if you look at it, earnings increased in no small part because of the Trump tax cuts. The other thing that you had was a strong dollar. So I'd say that's number 3. And then the most powerful was margin expansion. And so if you look at, I'm not margin expansion, multiple expansion. And so if you look at multiples today, the price earnings multiple, broadly speaking in the US, using the MSCI data, is 20 times earnings. International, 13. So you're paying more than half again to own US stocks. From a dividend yield, how much do you get paid while you wait? 2x. So US 1.46, international 3.1. Interestingly, people look at the US and they say, look how well it's doing this year, and that's true, 21% versus 14, but you're in the same spot over a 1-year basis. Actually, the international markets have outperformed by a marginal amount over the last year because US stocks had such a downturn last year. So I think international stocks still give you a margin of safety that US companies do not. People quickly point to, well, but these various economies have question marks. They do, but you got to remember, companies are not countries. They're competing in many cases for the same consumers that US global multinationals are as well. And I'd say longer term, if you say, how are we going to get from this period today to a faster growing economy globally, I still go back to the global middle class. And that global middle class is growing in places that aren't in the US and even in the developed markets in Europe. How are companies positioned to cater to India, Mexico, Indonesia, etc.? That's where the middle class is going to grow. And just like we enjoyed a phenomenal period of excess growth with the baby boomers, so too are these economies.